Hello traders, Gary Wagner here just after 1:30 in Honolulu, 7:30 in New York. It is Friday. Happy Aloha Friday, as we say on the islands, 20th day of April, 2018, and this is the Daily Report for Gold and Silver, our weekend review, and we had a lot of activity this week, ending on a sour note in terms of gold pricing, closing off by about $11.20 at $1337.60. Silver also fell under pressure, trading 12 cents lower at $17.11, and that all in light of a stronger U.S. dollar, trading up about 0.4% at 90.09. Continued selling in U.S. equities, down 200 points in the Dow, 24,462, and elevated pricing in Bitcoin futures, 85.70 and 85.55 in both the CME and CBOE futures exchanges. Now, for the second day in a row, gold is trading lower on the day, although today's move is a little bit more extreme than what we witnessed yesterday, with gold currently trading at $1337.60, which is a decline of a little over $11 on the day. Yesterday's decline was nominal, but it did break the consecutive upticks in gold that occurred for 4 days prior to yesterday's activity. The recent pressure in gold pricing can be partially attributed to a stronger U.S. dollar. We are looking at the dollar index on the bottom half of the screen and gold on the top. We can definitively see that over the last 4 trading days, pricing has consistently moved to higher ground and is now trading at 90.09, which is a net increase today of just under 0.5%. However, besides dollar strength attributing to lower gold pricing, we also have selling in the market that is responsible for a large percentage of recent declines. We are looking at the Kitco Gold Index for action today, in which physical gold dropped by $10.10, with $6.30 of that decline due to a strengthening U.S. dollar, and the additional $3.80 decline being attributed directly to sellers bidding gold prices lower. Which brings us to our trade activity this week. I am sorry to report to you that we were stopped out with a very, very small loss on our current trade. On the 10th day of this month, we entered a long position, this candle right here, and that was followed, of course, by a tremendous spike up in which gold traded to its highest point this year when it hit an intraday high of 1369. However, minutes released from the FOMC meeting held last month tempered those gains, and that was followed by a day of selling, only to see the market slightly recover until 2 days ago when it began to sell off. During that period, we tightened our stops not only yesterday, but the day before, as we saw the first signs of weakness in the current gold rally. We got into our trade at 1347.90. We moved our stop up yesterday to 39.70, which greatly limited our exposure to the market. However, it did result in a $8.20 drawdown on the trade. We enter this weekend flat with no active trades. In terms of the precious metals complex itself, this week was most interesting in regards to silver and palladium pricing. Silver had a tremendous upside spike on Wednesday, in which it gained 2.5%, a 40-cent price increase, actually taking current pricing well above the former level of resistance that exists between $16.95 and $16.85. It really all began on Tuesday of this week, when for the first time silver prices actually closed above the 200-day moving average, which was the first occurrence of that factor since the second week of February. The other interesting facet of silver pricing this week is the new resistance level, which can be clearly seen reflecting the 0.618% retracement found at 1729. As silver spiked up on Wednesday, its intraday high exactly matched that particular price point. On the following day, although silver traded to a higher high, it still closed below that price point. And then today, dramatic decline in pricing. And although silver slightly recovered, it still lost about 0.75%, closing at $17.11. I believe that we now have support at $16.95, but we now have a new resistance area at $17.27. Whereas the remarkable upside spike in silver this week was not based upon fundamental events within the marketplace, the same cannot be said for palladium. Palladium, over the last 10 trading days, has had one of the most remarkable climbs, moving from approximately $890 per ounce and is now trading at $1,030 per ounce, well above the price of platinum. The fundamental issues regarding palladium is that the majority of palladium is mined in Russia, and given the current tension between the United States and Russia, supply concerns over that precious white metal have also been elevated. Because of that, when I look at silver pricing at the bottom of the screen and compare that to current pricing in palladium, I greatly favor palladium from the long side. And traders, lastly, I do want to take a look at Bitcoin futures, which have been on a nice upward ascent, gaining about $300 today, currently trading at 85.55. If you recall from our daily reports, we first identified a potential bottom in the market when we saw a simple 2-day pattern called a bullish harami, an inside trading day to the Western technician, these two candles right here. We need confirmation for that pivot or reversal indicator, and on the following day, we did somewhat match the criteria. We had a higher high, a higher low, and a green candle, but because the body size was so small that day, we waited one more day to actually go fully bullish, and since then, we have been forecasting higher pricing. Our current target remains at $9,200 per Bitcoin. Possibly the most revealing and interesting aspect in Bitcoin trading this week was looking at cash Bitcoin, which for the first time in a while has traded and closed above its 50-day moving average, confirming our bullish sentiment. Traders, while it was disappointing that we saw a softening, pretty dramatic softening of precious metals towards the end of the week, the fact of the matter is that the elevation or recent rally in gold was largely due to some strong geopolitical hotspots. The fact that they alleviated did bring gold pricing down. However, as I said in my opening letter, that is an easy pill to swallow. This has been Gary Wagner, wishing you as always good trading. We'll talk to you next week for another daily update and review. Bye-bye.